Hi dear friends, today is Friday, June 13. As usual, we're going to discuss the charts for the euro and the pound sterling and try to devise nice trading plans. We see that the European currency has grown in confidence. The reason for the euro's rally is the dollar's weakness. The greenback took a hit from the CPI data, factory inflation data, including a core PPI. All the data was not good enough for traders to resume buying the US dollar. The PPI lodged a 0.1% uptick on month, weaker than we expected, 0.2% increase. The annual headline inflation rate was 2.6% in line with the consensus. The core CPI was 3%, down from 3.2% a year ago. Such easing inflationary pressure enables the Federal Reserve to revise its monetary policy. Meanwhile, Donald Trump has been stepping pressure on Fed Chair Jerome Powell. On Thursdays, investors monitor U.S. initial unemployment claims. The figures were consistent with average data, so the report was of no importance. The pound sterling lost ground in light of weak data on UK GDP growth. The UK economy contracted by 0.3%, worse than the expected 0.1% fall. This contraction may force the Bank of England to cut interest rates. Besides, inflation in the UK is gradually declining to the target level. Thus, there is no more excuse to hold interest at high levels. During the Asian session today, both the euro and the sterling plunged, but the dollar, oil, and gold rallied on parallel. The thing is that Israel launched strikes at nuclear targets in Iran. This attack could trigger a full-blown war in the Middle East. In this context, traders and investors are acting appropriately, selling risky assets and buying safe haven ones, in particular the US dollar. So the odds are that the greenback will continue its advance if Iran responds to Israel's attack. Previously, during the talks on Iran's nuclear program, Iran had warned that it would retaliate to any Israel strikes. Hence, it is extremely difficult to prevent a further conflict. Investors are now dumping risky assets. I urge you to be cautious about buying the euro and the pound sterling. Apart from politics, let's check the economic calendar and talk about fundamental events. Inflation data for Germany, France, and Spain are due in the first half of the day. The CPIs are likely to match expectations. If so, the ECB will stick to its wait-and-see approach after 8 rate cuts at each of the policy meeting. If inflation falls sharper than expected, the ECB will have to revise its cautious approach. But this will hardly happen, so inflation reports will make a minor impact on Forex. Industrial production and a trade balance report are the data of secondary importance. In the U.S., a consumer sentiment index by the University of Michigan will be available tonight. The index is expected to grow to 53.5, that will raise inflation expectation. The focal point for investors is the event in the Middle East. So, the macroeconomic data is taking the back seat today. Now, back to your charts. For the euro-dollar pair, 1.1507 is a good point to enter long positions. If a false breakout happens, it will be an excuse to add more long positions with the target at 1.1556. If the price settles above this level, the euro will rebound to 1.1591 and the door will be open to 1628, where I will plan short positions. I could go short during a rebound, bearing in mind a drop of 30-35 pips. In case of the escalation in the Middle East, I reckon the bears will pass 1507 easily. If the instrument settles below it, the euro will sink to 1456 and 1408. Then, I will plan long positions on the dip, bearing in mind a correction of 25-30 pips. Long positions from 1456 and 1507 are possible in the condition of a false breakout. The pound sterling could be traded in the same way. The level to enter long positions is 35.31, then the instrument could rebound to 35.67. If the price settles above it, we predict a rebound to 35.95 and 36.29. I will immediately open short positions, reckoning a drop of 25-30 pips. Short positions could be opened at 35.67 and 35.95. If the bears grab control, the instrument may plunge to 35.02 and 34.65. I will consider long positions bearing in mind a bounce of 35-40 pips. Good luck and have a nice weekend.